In this video, I'm going to go over precious metals, the US dollar, foreign currencies, and commodities. We can see on the stage analysis screener that the precious metals market as a whole is still in a stage 2 bull market, even though we've been consolidating sideways for multiple weeks now. We can see that the precious metals miners are still leading the metals. The silver and gold stock group still have a large majority of stocks in stage 2, whereas the precious metals themselves still only have gold and GDX and GDXJ in stage 2, as well as the silver miners ETF. Silver, platinum, and palladium are still lagging gold, and that's something to keep an eye on for this bull market going forward. And another thing to note on the screener is that, contrary to some other analysis I've seen on the internet, commodity sector overall is nowhere near in a bull market overall yet. It's just essentially gold that's in a stage 2 now. On the screener, we can see that only 13.1% of commodities ETFs are in stage 2, and we can scroll down and see that only the nuclear ETF, MLR, SGG, the sugar ETF, and GLD are in stage 2, and everything else is in stage 1 or still in a stage 4 bear market. There are a lot of commodities ETFs in stage 1, which kind of shows that the commodities sector overall could be turning, but it hasn't quite turned yet. And we've seen a lot of fake rallies turn into resumptions of bear market in the past for commodities and gold. So there's no reason to jump the gun, um, to say that the sector overall is in a bull market. It could easily consolidate sideways for a while longer or resume the bear market. Now, what's been going on the last 2 months essentially is the resumption of a rally in the stock market. You've seen the S&P 500 go from hitting 180 all the way to almost 207, so almost a 30-point rally, um, which is a huge rally. And earlier in the year, the S&P had its worst start ever, um, in its history, and then it recovered in this massive rally. So it's really confused a lot of people this year so far, and really everyone's wondering where it's going to go next. And we're still in this gigantic trading range. Um, so, and its impact on the precious metals market essentially has been to, um, keep gold from continuing higher. But gold had a huge rally and it's still leading the markets this year. So it's been consolidating sideways for about 8 weeks now. And, contrary to a lot of bears who have been trying to pick a bigger pullback in gold and time, a re-entry, they haven't been given a good, um, down leg to buy back in yet, which is a sign of uh, a an emerging bull market. And we want to see GLD hold above this ratio down here, which compares GLD to the S&P 500. When gold's in a bull market, it typically outperforms the S&P 500. So as long as GLD is above here, that's a good sign for this bull market. We've also continued to see pretty good volume coming in this ETF, which has caused this kind of bear flag or bull flag formation, as we consolidate the massive surge higher from earlier in the year. Now, silver hasn't been able to break out again after getting above the 30-week moving average. And this is again due to the gigantic rally in the stock market, but it hasn't given up the 30-week moving average either. It's trading slightly below it right now, but it still hasn't really given up support. But we still haven't seen the type of massive volume that's coming into GLD. So that's what we really want to see, for this next up leg higher, is to see some big money flow into SLV. Now, the silver miners ETF is kind of tending to show that there's a lot of validity to this precious metals bull move because there has been massive volume for multiple weeks in this ETF, and it's been outperforming SLV. Um, but we've seen this in the past as well with the stocks outperforming the metals. So the metals really need to um, hold at these levels and continue higher for this move in the stocks to be validated. Now, in my opinion, one of the biggest things happening right now is a major trend change in the international currency markets. We've seen the euro build a stage one base since March of last year, so it's been about a year now um, that the euro has been building this base, and um, it's starting to break higher above the 30-week moving average as of the last few weeks. We haven't seen really a big increase in volume here, which is kind of a bad sign, but it's been able to hold above it for multiple weeks. So we want to see the euro break above this trading range on some more volume for this move to be validated. The yen has already kind of um, broken out of its stage one base, which its base started back in December. So we can see that the yen bottomed a little bit earlier than the euro, even though it made a little bit of a lower low in the summer of last year. But it broke out into a huge rally back in February and it's consolidated sideways ever since. And we've seen some of the commodity currencies as well break out recently. The Australian dollar has broken above the 30-week moving average, but again, we haven't seen a lot of volume come into this ETF, so we're still in early days for this move here. But overall, most currencies are moving higher against the dollar now, and we can see that the dollar is breaking down below the 30-week moving average, and it's really at important support here. The Commitment of Traders report is actually pretty bullish on the U.S. dollar right now, but we're also sitting at major support. So if the dollar breaks the support, that's going to be a very bad sign for dollar bulls, and we can see that the dollar is finally underperforming stocks, where it had been actually outperforming the S&P 500 for almost 2 years. Now, again, the Dow Jones Industrial Average is pretty much the strongest stock market average right now, and it's really sitting right at this resistance from 2015. So I wouldn't be surprised at all to see the Dow start making new highs and maybe suck more bulls into the market, and we'll have to see what happens from there. Whether the first pullback happens at support here, or if it breaks down um, and gets back into the trading range and the bears take control once again. But it's notable that the Dow has been outperforming the S&P 500 since late 2014, and this is also where the markets have had trouble making new highs. Typically, when the Dow outperforms the S&P 500, the stock market is not in a growth mode, and not too many stocks are faring well. And that's essentially what we've seen now for almost 2 years. Now, one thing I pointed out earlier was that gold is outperforming all commodities right now, and we're still not really in a commodities bull market. Gold's been outperforming commodities since the middle of 2014 and has been surging higher recently after making a lot of bases, but with higher highs over the last 2 years. And gold is actually outperforming foreign currencies right now as well. It tried to break out in the beginning of 2015, but then pulled back all the way into late 2015, only to break out again recently. And we can see massive volume coming in, where GLD really took on a lot of volume versus the foreign currency ETF. So this shows that gold is acting as the strongest currency out of all currencies against the U.S. dollar, and that this move really in gold is mostly a currency related move, not really a commodities move. Now, again, commodities overall, as represented by the GCC ETF, are still in a stage 4 bear market. Um, they're trying to start a stage 1 base as of early this year, but this is still the first attempt at the 30-week moving average, and I can see this going on for a little while longer before a real bull market develops in commodities. Copper's kind of showing the same thing where it's tested recently and failed, and this is still not long enough of a base to really represent a typical transition back into a bull market. Again, I've seen some people bullish on the soft commodities recently, but there's no reason to expect a stage 2 rally out of this at all yet. I mean, the corn ETF hasn't even um, approached the 30-week moving average in multiple months, and you haven't seen any volume coming into this ETF either. And look at even what happened back in early 2014. You saw a huge move, only to fail and the bear market recommence. So you have to be always on the lookout for the stage 2 breakouts to fail, and you have to see them establish support once they retest the 30-week and not fail back below it. So to conclude, to learn more about stage analysis, you can visit my website and use my stage analysis screener. This is the URL, and I can be reached on Twitter.